Hey everybody, this is Ryan Mallory and we're going to do a stock market update for you guys. It was another down week for the market. You have the S&P 500 now on the month of September down 6.9%. You have the Nasdaq in correction territory down 10.1%. And now you also have the Russell Index down 6.7%. And what's funny is that the Russell Index has been the strongest of all the indices and they don't have any FANG stocks in it. So what does that tell you? That tells you because the Nasdaq is down the most, the Nasdaq 100 in particular, all the FANG stocks are dragging this stock market down. You have Netflix on the verge of a breakdown. You have Microsoft starting to break down. Tesla has seen a significant pullback. So yeah, the FANG stocks, the most popular stocks, your growth plays, they're all starting to see major corrections in their stock price right now. The S&P 500 is down 2 weeks in a row. The Nasdaq 100, it's down 2 weeks in a row. The Russell is down 2 weeks in a row. And the Dow, who cares? It's down too. It's not important, so we don't track it. We don't talk about it because it's irrelevant. Because it's a price-weighted index and not a market cap-weighted index, so it skews its results. That's why you never see me cover that particular index. And having a 2-week market decline, it's the first time we've seen that since late April, early May. For the Russell 2000, this is the first time it's declined 2 weeks in a row since the stock market rebounded. You want another stat? I'll give you another stat. You got 40% of your stocks trading above their 40-day moving average. That's the lowest since July 13th. So clearly there is a little bit of a change in the character of this market right now. I tried to play the bounce a little bit this week, took some partial gains on one of my trades. Hasn't really materialized yet. But we're going to talk about whether or not the stock market's going to bounce this upcoming week. And if not, what are some of the downside targets in the week ahead? So let's go ahead and get into that right now. It's also worth mentioning that for the Robinhood traders and Robinhood bros that got into this market post March 23rd, they're seeing their first action in a down market. They're seeing the market finally start to pull back a little bit. They're probably not sure what they're actually doing. They're probably going to start seeing that one bad trade can wipe out a litany of good trades if you don't manage the risk. And if you have been watching this YouTube channel for any amount of time, you know that I preach manage the risk every single video. If you're not doing that, you're not going to be profitable. It's just as simple as that. So what you're seeing now is they're a true test of their willpower. And you're also seeing the algorithms which have been programmed to buy every dip, attempting to do so over the last 2 weeks, and it's not really working. And so the more that they try and the more that they fail, the more that these algorithms are going to be reprogrammed not to buy the dip, the more demoralized these Robinhood bros will become to not buy the dip. And then you'll start seeing some greater selling to where we have an extreme washout in the stock market. And then that's where the bottom will eventually form. But it'll take weeks, if not months, to form. So the key going into this week here is, can the dip buyers buy the dip successfully and push the market back up near or at least close to its all-time highs? That's the big question going into this week, so let's go ahead and get into the charts right now to explore that. And before I forget, make sure you check out the YouTube channel membership, because if you want to go above and beyond my 2 videos that I do each week, you're going to want to check out this, because every week I'm giving you multiple updates on all the market indices from the S&P 500 to the Russell to the Nasdaq. I'm also providing you with access to my personal indicators about market reversals and market tops. I'm also giving you guys updates on a weekly basis on all the FANG stocks, plus Microsoft, plus Tesla, and access to my watch lists, both bullish and bearish, and all the most interesting charts on a daily basis. So make sure you check out that, click down below, join, and you can get more information and find out what package might work for you. The one thing that I try to do is make them all affordable so that it's no burden on you to be able to take advantage of. So on my first chart, the S&P 500, I'm going to give you the monthly, and a little bit different from the previous week. So I'm going to start from the monthly and work my way down to the daily charts on the Nasdaq, on the Russell, and on the S&P 500 here. So first off, the S&P 500, the big resistance line that I want you guys to see, and this is why we're seeing the selling, besides the fact that the market was insanely overbought at the all-time highs. Look at this rising trend line going all the way back to 2012. So far, the S&P has respected this trend line perfectly. And so even if we rebound and we do make new all-time highs, I still think that this rising trend line is going to continue to wreak havoc. There's no reason not to think so yet. So if it does rebound and if it does bounce back up to this rising trend line, that's where I'm going to go take profits on all my positions. Because when it has been this consistent and this dogmatic about not breaking back above that rising trend line, that's where you need to take notice. So even if we do go into this big market correction here, let's say we drop another 15-20%, and then we rebound, and over time we go right back up to the all-time highs, this resistance level should still be on your radar. It's a major resistance level, and it's best seen on the monthly chart. Now check out the weekly chart of the S&P 500. You have another trend line going all the way back to 2009, 11 years ago, and it has tested it multiple times. Now it tested it back in March when it hit the lows, and it actually broke below it. That was a huge concerning moment for the stock market, because if it couldn't break back above it in short order, this thing was going back down probably to 18 to even 1600 on the S&P 500. It didn't, and within days it had reclaimed that rising trend line and has gone all the way up to new all-time highs before finally pulling back again. So if we continue to pull back, this is going to be a trend line to watch. Now, I'm not saying that that's going to happen anytime soon, but it's always good to know where there could be some serious panic inflection points in the stock market, because oftentimes that's where your bottoms happen at. And just like it did in March, it wasn't a clean bottom, but it was a bottom right around that area there. And we should be following that in the future for any major corrections. Now, I'm not saying that that's going to happen, and I'm not saying it's going to happen next week or the week after that. But one of the things about being a good trader is to think ahead of everybody else. Start playing for multiple moves down the road. If we have a major sell-off, where does this possibly go down to? If we don't have a major sell-off, and I'll get into that in a second, where could it finally bounce at? So this isn't me sounding the alarm saying, okay, let's be like Chicken Little, let's go bury our head in the ground, let's get all crazy. No, I'm not saying that, but it makes sense to look ahead. Now, also worth noting on the weekly chart is the volume decreasing up until the last 2 weeks. The last 2 weeks, the volume has spiked, and that goes back to what I've been saying for a long time now, is that the market rises on light volume. That's been the case for many years now. And when the volume is light, it gives the market an opportunity to go higher. But when the market starts seeing some volatility, you'll start seeing the volume increase, and that's when your sell-offs happen. So as you can see in the last 2 weeks, the volume has seen a spike higher. It hasn't been anything like what we saw in February, but it is definitely much higher than usual. Now, in the video from last week, I mentioned to you guys, watch this rising trend line going all the way back to April. It has held it perfectly time and time again, but it did break it last week. And as mentioned in the previous video that I did, I said, watch this trend line going all the way back to April. We're testing it. So far, it's been held. But now this week, we broke it on Tuesday, the first day of the trading week, bounced back above it on Wednesday, and then spent Thursday and Friday trading back below it. So that's a huge concern right there. I know we're oversold on the daily chart, and so that could provide some relief for the bulls going forward. And it's not completely breaking down. It's actually still holding on to the 50-day moving average, which I wasn't sure that was going to be something in play for the market. But so far, so good. It held it the previous time that it tested the 50-day moving average, and there's the potential for there to be a bounce in this coming week off of the 50-day moving average. But expect some resistance off of this broken trend line, because while it did break above it last Wednesday, it immediately sold back below it on Thursday and Friday. Now, on to the Qs. This is the Nasdaq 100 ETF, QQQ. What concerns me here is this massive bearish candle. We have not really seen a lot of candles like this. So it is the second half of the month going to provide us of a relief bounce, kind of like what we saw back in March? It's possible. Yes, there's a very strong potential for that, because as you can see in previous months where we had a significant amount of selling, it didn't necessarily lead to significant selling the entire month. Oftentimes the second half of the month saw a bounce higher. So that's what the bulls are going to want to be looking for this particular week. But if it doesn't, then you have a ugly bearish engulfing candle pattern, because if it doesn't bounce, it's likely going to be going much lower, right? And if that happens, then it's going to be engulfing the entire month of August. That's a very bearish candle. You don't see a lot of those, but you did see one back in February, and when we saw one back in February, we saw a huge sell-off in March. But hey, who knows? Maybe there's some reason for hope here, because back in April of 2019, the highs there was a nice level of support that was created, and guess what? We're testing it right now. So the question becomes, are we going to bounce off it this week? I think there's a good chance of it. I actually think that this candle that we had last week in the Nasdaq was not a bad candle necessarily at all. Oftentimes those are bottom candles in the stock market. So let's see if we go ahead and get that bounce this week. Now, check out this daily chart of the QQQs here, going all the way back to 2015. You have a major trend line here. So again, as we've talked about on the S&P 500, it's good to forecast, okay, if things get really bad, where could it pull back to? As we saw in March, the huge sell-off found support at this level. So if we do pull back, yes, it would be a disastrous pullback. It would be like a 33% price from where it closed this past week at, but it's very possible. Anything's possible in the stock market. You go back to 99, 2000, we saw a massive 87% pullback off of the highs. That's not going to happen next week or the week after, but you need to keep an eye on these things, because they do provide major support levels on significant pullbacks in the stock market. And don't forget, we're still in a pandemic, we still have social unrest, we still have high unemployment, and we still have ridiculously low GDP numbers. So yes, we are in a recession here, so anything's possible. Now on the Russell, it's looking at its first potential red candle since the market bottom back in March. And I'm going to be honest, I like it less than any of the other indices out there. In fact, it looks like a very bearish chart. It has not recovered like what the S&P 500 recovered and the way that the Nasdaq recovered. Instead, it's facing a lot of resistance. It's choppy on every time frame, whether you're looking at the daily, the weekly, or the monthly. Even on the hourly, it looks choppy. But as you can see, there's a lot of resistance going on right here. There's this huge range of resistance that it just has a very difficult time pushing through. And it has not made new all-time highs since 2018. So this is an index, the small caps, that are truly in a rut because it doesn't have any FANG exposure. And really the story of the last 2 years has been the FANG stocks driving the market higher while less and less stocks participate in the market rally. On the weekly, it's the same thing. There's this huge resistance level that goes all the way back to 2019. It's still affecting the stock today. Yes, there's been moments where it's broken above it, like what we saw in the beginning of this year, but nonetheless, it didn't hold it. It resulted in a huge, massive sell-off, creating a lower low, and now we're just stuck right back at this resistance level here. And then the daily, and I highlighted this last time, and it's got a double top. It hasn't done anything to reverse that double top on the daily chart. Lots of resistance, as I pointed out on the weekly chart, and it has a look of an index that could go down deep into the 140s. Now, the quagmire in all this has been the VIX. You would think that with the market selling off 2 weeks in a row that the VIX would have been rising last week, but it did anything but that. It sold off significantly. It sold off on Friday, 9.5%, despite the fact the S&P 500 sold off too. It's not very readable at this point. I'm not sure what's going on there, but the volatility is not matching the amount that we're selling off in the indices and across stocks, which tells me that we may in fact see a bounce next week because this is diverging away from what the rest of the market is doing. In all, always manage the risk. Make sure that you're putting stop losses in, because if you're holding on to stocks and you're starting to see a little bit of red in your portfolio, you don't want that red to turn into massive amounts of losses. So you want to have a line in the sand. You want to pre-plan these trades before you ever get into the trade so you know when to get out, so it's not emotionally driven. Every time I get into a trade, I always know where I'm going to get out if the stock goes against me, and you need to be doing that too. If you like this video, please make sure to like and subscribe. Hit that like button, and also make sure to subscribe so you get notified every time I post a new video. It's a great channel. I'm one of the few people that's really trying to help you guys out here by trying to provide realistic expectations for the stock market and to not get yourself into trouble, because you can listen to a lot of these blowhards out there and they'll make you feel good, but in the end you just lose money because of them. So don't do that, and tell me down in the comments, what are you guys thinking about this market right now? Did you buy anything this past week? I did, but I'm also using tight stops. I'm also taking profits along the way, and if this market bounce fails, I'll be ready to get back out and even possibly get short. So let me know down in the comments below, what's your strategy for the upcoming week? Thank you guys, and God bless.